Hello, everybody, and welcome to this week's Forte Financial Mortgage Group podcast. This week, we're focused on getting realtors ready for the 2024 market. And this week, we have one of our loan officers, Chris Miller, with us today. Say hello, Chris.
Hey, everyone.
Thanks for coming. One of our missions has been to educate and to get a lot of information out there. And I'm so excited about this forum because, many times we'll speak to a realtor and we'll spend a half an hour, 45 minutes explaining different things, programs, things that we can do, what they need, how they can be more successful in this more difficult market. And that's wonderful. They learned a lot. They got a lot of education, but that was half an hour, 45 minutes to educate one person. So if collectively we, through these podcasts, we can educate, 10, 20, 100, thousands of realtors, or, for the purpose of this podcast, realtors, that's what we're trying to do. So we're hoping to be able to share as much information to help you realtors be a little bit more successful in this 2024 market. One of the problems, let's start out with one of the issues we see on this end, in trying to educate realtors, is that most real estate companies have an affiliated business relationship with a mortgage company, or some of them have multiple relationships with mortgage companies. And, I know you and I, Chris, both have dealt with this where we have good relationships with a specific realtor within an office, and we're like, hey, would love to come in and talk to your team and explain some of the things that we do that I know that our competitors aren't doing that they need to be aware of. And it's like, oh, sorry, we're not allowed to have anyone in because we have an affiliated business relationship with XYZ mortgage company. So those realtors are really losing out on valuable knowledge that they're unaware of. And it's the lack of education. A lot of it has to do with these other relationships that they have that are preventing other people that do different things that could very well be more beneficial for the clients, and they're not aware. So that's, again, one of the big things that is why we're doing this. So, Chris, why don't you share with us some of the things? We've had a couple of stories recently with some situations with some agents and attorneys and borrowers. Why don't you share a little bit for our audience?
Well, one of the things that I run into, I think, or we run into often is maybe just the lack thereof knowledge of what's out there. And that's something I think we touch on a lot. And when we're talking to our realtor partners or attorneys' offices, sometimes they just really it comes off, not necessarily that they're uneducated, but they haven't been educated enough. And as a former realtor, that is something where I always felt empowered when I had more knowledge. And so I feel like what we're doing is just empowering people to be better in their careers, to help build better value for their clients. And just by giving that knowledge is what it's all about. And situations I think come across all the time where we're talking about maybe rates or terms or a program with a realtor and or an attorney's office, and maybe they just didn't know that it existed or that we could do that for the client.
Right. So let's get into some of those examples. Let's get right into it. So, first of all, one of the things, I think I know what everybody needs and wants, but that's not always the same. And that's why I love, Chris, you were a realtor first before a loan officer. So you know a lot better than I do the mindset of an agent and what they're thinking of what's important. To me, I've been trying to express through as many forms as possible, hey guys, we offer our average rates, our rates on average are about 0.5% lower than our competitors' advertised prices. When you compare the same points fees to points fees, it's about 0.5% lower. And when you combine that with the fact that we can actually issue a loan commitment, not a pre-approval letter, a loan commitment faster than most mortgage companies can produce a pre-approval letter, first conversation with client to an actual underwritten loan commitment can all happen in the same 24-hour period. Like, we can close a loan legally in 8 days. There's been multiple situations where something was falling apart, somebody needed, to be saved because they had to close. 8 days. First conversation with the client, closing 8 days. So I know that realtors are not aware of that because most mortgage companies cannot do that. So, that's one thing I want to share, agents. We can close a loan as fast as anyone out there and at the most aggressive rates terms because, just because the loan officer that you're working with, maybe it's the affiliated mortgage company, their loan officer, they might be great. They might be very knowledgeable. They might, have great customer service. Your customers might like them. But if they're giving them a rate that's 0.5% higher than they could get from a company like a wholesale broker lender like Forte Financial, who's going to give them at least the same service and best workflows. Like why wouldn't you want them to come see us? Like why wouldn't you? Because that's just doing them a disservice. And what we're finding is a lot of our competitors are non-bank mortgage company lenders and banks. They're just getting worse and worse in terms of their pricing. And we're hearing all the time from realtors like, this in-house mortgage guy keeps, is hounding us for loans, but his rates are not great. And they're being pressured to refer out. I mean, you can speak on this.
I had that conversation this morning with somebody, just in particular, like a very specific case. We're planning an event, the realtor and I, for first-time homebuyers. In a local community, and her immediate concern was, well, we have in-house lending, and God, am I allowed to market with you? Am I allowed to do that? Am I going to be out of compliance? And unfortunately, the mindset is you're under the control of the brokerage, but as a prior independent contractor, they cannot dictate that to you. There are a lot of things that they can kind of push on you and put in your face, like an in-house lender, where you're constantly being kind of, we'll call it hounded for business, but or pushed on that specific lender. But legally speaking, it's just not. They can't do that. But the way that it's presented to realtors, I felt as a realtor, you feel obligated to use that person because of how the brokerage makes you perceive that relationship. And it's unfortunate because a perfect example is a loan that I'm working on right now with a realtor that has in-house lending. We priced it out with us, and I priced it out with that realtor just so she was aware of the rate and the term and what that looked like and what we were going to be able to do for the client. And then we priced it out against their in-house lender. And the in-house lender was about 0.3% higher, but the fees, it was about an additional $3,700 in fees.
Oh my God.
Because of the points they were charging. So I think that is just proof right there that, you don't necessarily get it. And as a realtor, I always would take the step back. And that's when I would start coming to you and say, hey man, does this make sense? Because to me, I'm looking at it going like, how could this be? How does that line up? I mean, that's why I'm here in the first place, because we've looked at other shops. I took the time to examine what that looked like before I came here. But given that knowledge and just taking the time to go over that is the only way that everyone is going to continue to learn more and be able to provide a better service and provide a better experience to their client.
Wow. Yeah. I mean, Chris, that's awesome because that's a perfect example. When I said earlier, hey, we're on average 0.5%, that's assuming the same fees. For I don't know what the loan amount in this example is, but for $3,700 more in fees, that probably equivalates not a 3/8 different apples to apples comparison. It's probably more like a 3/4 in rate difference for same fees because, that's why I always say apples to apples because, some company can say, oh yeah, well, we're offering the same rate as them, yet they have 2 points and $10,000 in fees when ours are zero. You know what I'm saying?
I think it was 0.5% higher would have been no fees.
Okay.
So just for that exact comparison.
So in that case, we were literally 0.5% lower than the in-house mortgage person comparing apples to apples. And realtors, like, that's really not cool. That's really not cool that, to not educate the customer and give them, another solution that's not the in-house mortgage person. I know a lot of realtors say, oh, we give out 3 names and, but I know a lot are not doing that, or they say they're doing it and they're not really, so it's just education. So here's the thing. About 8 years ago, the non-bank lenders, which most mortgage companies have a non-bank type of lender affiliation. Again, this isn't pointing and targeting. We're not naming real estate companies. We're not naming mortgage companies. We're talking general. Like some of the big real estate companies, the largest in the world, their affiliation is with these non-bank type of lenders, and there's a lot of them. And that model, that business model, was a great business model about 8 years ago. But there was a shift, around that time period. Like I know in 2012, that time, so that was 12 years ago, I made a switch from the wholesale side and went into non-bank lending. And at that time, the reason that it was pricing and rates and process was not good in wholesale because of technology. And where the non-bank lenders, they developed it themselves and they had much better and more aggressive pricing as far as rates and terms, and since then, the wholesale model has just exponentially grown, where now, like the example we said, we're 5/8 better. And the thing is, this all happened, many because as you know, we're recruiting. When I sit down and talk to loan officers, they don't even believe it. They're like, are you absolutely kidding me right now? I can give a customer that much lower of a rate and get a higher commission. They don't believe me until I show them. But so the point is, you have to educate your borrowers. And if you're not referring out to a wholesale broker lender like us, then chances are you're not giving them their best option in most cases. Because like I said, we compare even to all of our local banks. We're beating all of our local banks. We just did a comparison yesterday where the borrower's attorney is, I don't want to use the word steering, but it looked like the borrower's attorney was trying to steer the customer to go to their mortgage person, which happens to be a local bank in our area, and we're better. And it's just, there's a lot of this going on, and you just need to be aware of realtors. That's it. It's not just, and a lot of agents, they say, oh, well, we just want to make sure that the deal's going to get done and that all these other things. First of all, we're not missing any programs. We have no overlays on top of what, let's assume it's a Fannie Freddie loan, and it's a conventional loan. A lot of banks have their own set of guidelines on top of what Fannie Mae, Freddie Mac require. We don't. And, you're talking 24 hours commitments. I mean, sometimes we get a commitment in 1 or 2 hours from when we submit the full loan into underwriting. So, it's just one of those things where it's not just the best price, rate, service here. You're getting the whole experience as well. Especially someone like you who has the most amazing customer service skills, from knowing what a realtor wants and the follow-up and the consistent communication is key. Nobody communicates better than you that I've seen. So
I appreciate that. But I think just to circle back to this for a second, because I think sometimes the translation is important.
Yeah.
When we're talking about 0.5% difference, let's call it a $500,000 or $600,000 loan amount. It's got to be a couple $100 a month.
It is.
So how does that, as a realtor from my past, how does that not, being empowered with that knowledge to inform your client, like, hey, why would you go here when it's going to cost you $200 or $230, whatever that is, whatever that number is, even if it's $150 a month, when the rate and fees and the turn times and the communication is going to be better, why would you do that just because they're essentially steering you to use an in-house lender? When all of the other things and the programs that are out there that the in-house lender has, we're going to have the same programs, we're going to have faster turn times, and we're going to save the client hundreds of dollars a month. Not just on the upfront side, but looking at it, let's just say they kept the loan for 30 years. What's the amortization schedule look like over 30 years at a 0.5% or 0.5% higher interest rate?
I mean, if you're talking about $300 is $3,600 a year, that's
times 360, or 360, whatever it is, $200 a month times 360 months.
Yeah, I mean, it's a few $100,000.
But
I mean,
that leads us back to our free refi program.
Yeah,
that our clients that work with us, that are loyal to us, that they're going to get these better rates and terms every time. Essentially, rates come down. Mm-hmm. We can do that multiple times in the life of a loan. Yeah. And why not, again, give that better service or that better offering to the client? So
what Chris is referring to, this is something we talk a lot about on this channel and our TikTok, if you follow our TikTok, is our no-cost refinance, We offer this to all of our our clients that are coming in the door. They're buying. They know they're buying in a higher interest rate environment, and we're going to talk realtors a little bit more about some other tools that we can use as far as rates and buy downs and things like that in a minute. But this no cost refinance, because our rates and terms are that much lower than our competitors, what we do is we actually give the customer, let's just say your closing costs in Connecticut are $4,000 for underwriting fees, appraisal if there is needed one. I'm sorry, if one is needed, title charges, recording fees. Let's say all that adds up to $4,000. We provide them a lender credit of $4,000, which in essence pays for that cost. So it is free after you factor or no cost after you factor in that. So they're refinancing at no cost.
And they're saving on average $150 a month for most of the ones we do.
Yeah, I mean, some a lot more. I mean, we have another one that's saving literally like $500 a month right now.
Yeah, loan amount depending, right? Like
sure. But yeah, so the point is, this is something that there's no competitor of ours that I've heard of, or that, and every customer we offer to says, well, there's so-and-so isn't offering us. This person that we talked to at the bank, this nobody else is doing that. We can afford to do it because of how much better our model is. So we can give some of that and still give the customer a better rate than our competitors who aren't doing it for free. That's really what it comes down to. But let's talk about rates for a minute. So, one of the really cool things, I know a lot of you agents have probably been hearing a little bit about these buy downs, 3-2-1, 2-1, 1-1. And, there's a lot of, I'm sure there's some education required, where the long and short of it is, if you get a seller credit from the seller, that seller credit can be used to buy the interest rate down for a period of time. So let's just say, for example, the rate right now is 30-year fixed that they would get normally is 6.5%. I'm not quoting any rates, but I'm just giving it as an example, 6.5%. You do the 3-2-1 buy down the first year with this seller paid credit, the rate is 3% lower. So, that's 3.5%. Then the second year it goes to 4.5%. And then the third year is 5.5%. And then after that, it goes to the full 6.5%. So, I mean, these are tools that we can use also if someone is not happy about buying in a higher interest rate environment. And the one cool thing that a lot of people don't realize, who do understand what the buy downs are, but what they don't realize is the sooner you refinance out, the better. Because that buy down, let's say it was $20,000 in cost that they got from the seller to buy that rate down, that money is put into their escrow account, and the difference in payment, call it from the 3.5% to the 6.5%, that payment difference is paid by this buy down money that's in the account. So if after 6 months we refinance them, they're still going to have most of this money. That's their money. They get that refunded to them, with a subtraction off of their principal balance. That gets subtracted off of what they owe. So let's say there's $15,000 in there, and the principal balance on the mortgage is $500. Now the payoff is only $485. They're getting that $15,000 back. So, a lot of people say, oh, well, why are we going to waste money in a buy down when rates are going to come down and they're going to refinance? Well,
if the seller's funding it.
Right. If the seller's funding it, and if you refinance, it's that much more incentive to refi because you get all that money that's unused. So that's a really cool tool. But one of the things we do is just our 1-year buy down, which is really cool because in most cases, we're able to offer the customer a 1-year buy down at a lower rate, meaning like the deal is a better deal than our competitors' rates and prices with no buy down. So in essence, they could have the same deal from us. Let's use a 6.5% rate, for example. Let's say the rate's 6.5%. We're going to give them that 1-year buy down basically for free, and where they're not going to get that from a competitor. So their rate in their first year is 5.5%. These are just such cool little. We could talk all day long about all the. I mean, creativity is where we are. I mean, we have the sharpest tools in the toolbox, and all the creativity and knowledge from collectively all of our experiences. So that's a really cool tool, the buy downs. give us a call if if you want to learn more about this specifically, or you have a customer that's extremely stressed out about rates. We have some great solutions for them.
I don't know if we talked about it, but I recently had a borrower that came to me from a realtor. Mm-hmm. They had put in an offer. They had a pre-approval. Mm-hmm. The pre-approval was from a major bank, mm-hmm. not to name names.
No, we don't name names here.
That person happened to be an employee of the bank on the retail side. Sat behind a desk as kind of a customer service person, or I forget the title, but mm-hmm. They were employee of the bank. They had a pre-approval from that bank. They got an accepted offer with that pre-approval. And when they went back with the signed contract and handed it in, you're not pre-approved. And the client was beside himself. He didn't understand what happened, right? So we sat down, we looked over the whole thing, and it came down to just being creative. He, in that scenario, was purchasing a multifamily. Had a few things on his credit that he had some extra cash that he could pay off, small things, which we made work. And then we were able to use the income from the second unit to help him qualify. And it was a no-brainer. I mean, we had him pre-approved, the pre-approval letter, a new one, in about 6 hours, and out back to the seller's agent, the selling party on that side, went forward, had it underwritten and basically approved and closed in about 3 weeks. And
that's awesome.
His own employer declined him because they didn't spend enough time to just look at the file, look at the possibilities of being a little bit more creative, mm-hmm. and not just being black or white, and it's just this or that. And I think that, to me, that's something I've learned a lot from you on how to kind of tweak those scenarios to make the numbers work for the clients when there is that availability of changing things. But just that in itself, like, those are the type of things that, as a former realtor, I would have loved to have had somebody that was, able to be creative in those scenarios and figure out a way to make things work. I mean, that's when we started working together, that's how I ended up here in the first place.
Yeah, awesome. But, no, that's great. Yeah, that's like, those stories are the ones to me where I'm constantly sharing. It's a great example for some of the creativity. Some of the other, there's a lot of people. And it's not like you said, it's not that people are uneducated, is that I think a big problem is that things have changed so much that people in the industry don't even realize it, because it's changed so rapidly and so fast, where, a lot of, and I don't want to just stereotype or whatever, but all of the older generation were used to going to, this is my local bank. Right. So now their kids are buying a house. Oh, you call so-and-so at the local bank. Yeah. And they're obviously in their mind thinking that they're doing what's best for their kids, when the reality is that is no longer the case, where maybe 15, 20 years ago when they originally got their loan, maybe that was the absolute best place to get a loan and get the best rate and all this. But we compare ourselves to the local bank, smaller community banks, large, huge conglomerate banks. We compare ourselves to them all the time. And we're winning every time. Everyone I've looked at in the last few months, we're winning. We're beating them,
Because I'm conscious of it. Every deal I price for a new borrower, that's the first thing I do. Let's look at X, Y, and Z banks, and then let's look at our other lenders, and let's see where we really sit.
Yeah.
And it's always just a clear winner.
That was my problem when I was working for a non-bank lender before I opened this company, and when I would look at like competitors' pricing and say, like, if they call this, other lender or bank, whatever, they can get a little bit better of an interest rate than I can give them, that didn't sit well with me. Like, I did not sleep at night. And when I realized how dramatic the shift went back into wholesale as being the number one resource, as soon as I saw that, I'm like, wait a minute, so I can give a customer the best deal out there and make more money. What am I doing here? Why am I still here? Why am I embarrassing myself, the client, and the realtor? Because if, as a loan officer, you work really hard to build a relationship with a realtor, but if you're offering the client, you might be amazing. You might be great at your job and, can get things done quick and smart and all this other stuff. We'll talk to the realtor on a Saturday at 9 o'clock at night. Well, if your rates aren't good, then I'm sorry, but you're not the best solution for that borrower just because you're a good loan officer. And I think the more loan officers see this, which is one of our priorities, is to educate loan officers. The ones that I'm speaking to recently are trying to rush in the door to come on board because they see that they want to keep these relationships with these realtors and build new ones because the opportunity is there. Like realtors, I don't know if you're aware of this, but UWM, United Wholesale Mortgage, they're one of our investor lenders that we work with. They became the number one lender in the country. It was around October of 2022, maybe November. Number one, meaning they close more mortgages than any bank, anyone, more than anyone. The reason that's relevant is because you cannot call as a consumer UWM directly to get a loan. You have to call a wholesale broker lender like Forte Financial in order to get that. So why is that? It's because the rates are lower, it's less closing costs, the process is faster, better, easier. It's the best. That's why they're number one. Realtors aren't aware. Most realtors are not aware of this. Honestly, I think there's more awareness of our channel out, in other parts of the country. Like for those of you that, are not aware of where we are in Connecticut, in the East Coast, and most of our business is in the East Coast. We're licensed in 10 states, scattered around, but most of our business is in the Connecticut, New York, New Jersey, Mass, Florida. We do a lot in Florida, Carolinas. But the point is, in our area, it's not as prevalent. This wholesale model is not as prevalent as it is in, the middle of the country. There's more going on there from what it seems because there's a real need for what we do.
If I could touch on the UWM thing really quick. I think going back to the realtor perspective, since I came on with Forte Financial, it's almost been 2 years. One of the things that UWM offers us as a partnership is they facilitate realtor trips to their facility in Pontiac, Michigan, which most people, I can tell you from being a realtor, I was never offered, hey, do you want to come out and see what the back end looks like? Hey, do you want to see what a highly functioning, top tier service company looks like on the back end? Oh, and get a little training while you're there and a little bit of motivation and a little bit of insight on how to grow your business. Nobody offered me that as a realtor. I've been fortunate enough to do that trip with, I would say probably about 15 realtors so far, where I was able to take them out to UWM, which is, by the way, at our expense. The realtors don't cover anything. Hotel, flight, that's on us. But it's something that we are doing to further educate our realtor partners, to further provide a benefit to our realtor partners, to put out there and build those relationships and provide that luxury experience of working with a wholesale broker, a Forte Financial, to show the realtors out there, especially ones that are willing to accept some change, what it's like on this side of things. And I think that is like a huge thing for me, because the relationship time that you get to spend with each other, learn more about each other, build a personal rapport, build trust, and have that connection with somebody is huge.
And realtors, just to be clear, we are looking to build more relationships with agents to work with. So, please, if you'd like to have another solution for your borrowers and buyers, I can promise you they're getting the best here. And the best isn't, I'll be honest, I used to think, the best is the person that was the most creative, could figure out any loan. That's an incredible trait, but that's not really what the best is. The best solution is the person that's going to give great customer service, have great communication, but have the best deal, have the best. At the end of the day, this is the largest person any human being is going to make in their life. And if we're talking about, over the course of a 30-year mortgage, we're talking about, it could be a couple $100,000 in difference, or $100,000 in pay. I mean, how is that not one of the most important things? Like, as long as you're good, you're competent, you communicate, and your systems and your process are fast and efficient, it all comes down to rate and price. It really does at the end of the day. And I just feel like there's not enough emphasis on that from when I speak to realtors. I don't get enough of that, and that's really is something that it should be on the forefront. So yeah, the realtor education coming out, the free trip to learn, it's very motivational. There's a lot of great stuff that you're going to learn in terms of the process.
We've had some great times. I've really enjoyed those. And I think I'm going to drive this home again, because as a realtor, I always felt like I was lacking in information. And as a loan officer now, I get to be the one educating and kind of building that relationship with knowledge, and just kind of driving that home so that nobody feels like they're in the dark, and that I get to say, I know what you need because I've been there. To me, that's important. To me, that's empowering. Like I know what it's like to be on the other side of the deal, and you're like, haven't heard from so-and-so in days, haven't spoken to I haven't heard anything, there's no updates. That it's just unacceptable. And it shouldn't be okay. It just shouldn't.
Right. Well, one of the other things, so we're going to have our next, one of our next podcasts we're doing, which Realtors, I think you're going to be pretty interested in watching this. We're going to have the owner of one of our appraisal management companies on here with me to discuss the whole process. There's been dramatic changes in the mortgage industry over the past, really quite frankly, since 2008, since the crash. A big part of the crash and the issues that were found, was mortgage fraud regarding appraisers being, just pushed by mortgage companies and loan officers to achieve a value or suggesting values. So it really crippled the appraisal process, taking the ability to order an appraisal out of the hands of the loan officer and completely stripped the communication away, which, in a lot of cases went to the flip side, where borrowers were getting atrocious appraisals. The appraisers didn't care. They just, they would, in many cases, come up with a really, poorly done appraisal. And I don't mean poorly done value. I mean just comps weren't even comparable types, different neighborhoods, because the appraisers being sent in, were not from that area. For example, you have an appraiser on the other side of Connecticut, coming into Ridgefield, Connecticut to do an appraisal here, who doesn't really know the neighborhood and why would a house in this neighborhood be worth more than this neighborhood. There's a lot of reasons you're really only going to know if you're in that area. We saw so many problems like that. And, so we have found, one appraisal management company in particular who understands that and has really put a great process in place to, be compliant, to not have any issues, with any communication with the appraiser, any pushing values, any of that, but at the same time understanding how to put together a really, really good and fair appraisal. So we're gonna be bringing on that individual shortly. So stay tuned for that some more. Which is another great thing. Appraisals. A lot of realtors are very concerned about, well, who's this appraiser? Right. Everyone knows we can't talk to them, but as close to speaking to the appraiser as we can is what we have, where we can confidently say, listen, we know you're going to get a good appraisal. No, I can't speak to the appraiser. No, I'm not going to. But because of our process, I know that we don't have any problems. Listen,
because of the AMC we're using.
Because of the AMC we're using.
We know.
If a value's not there, a value's not there. But if an appraisal comes in short of a purchase price, it's because it really just isn't worth it. Right. And why is the buyer going to be buying it anyway if it's really not worth it?
But the nice part is we do know where our appraisers are coming from. We know that they're local. We know the company that they're coming from.
Right.
And that in itself gives us confidence, again, that we're just using the right people in the right process.
The vetting process is quite different with this AMC versus, some of the huge other ones that we have worked with where there's horrific communication. I mean, embarrassment and just embarrassing. I respect the laws that were put in place because I agree there was major problems with, loan officers pushing appraisers, and something did need to be done. But, to the extent it went was, it's always like, hey, let's correct it. The problem is here, and then you go all the way over here. It should have went here, you know what I mean? Not over here. So I feel like that's where we are right now, is here, based on how we, So the point is, every facet of this business, we truly have developed the best, most efficient systems in terms of best rate and price, got you covered. Speed, turn time, we got you covered. Appraisals, you're going to get a fair appraisal. Like, we really have it all covered. And just I know we're talking a lot. This podcast is going by really fast.
Oh yeah, it is moving pretty quick.
So a couple of things too, realtors, that we want to make sure that you are aware of, that some of the things that we're doing. We do all of the non-QM type of products, which we call it. So, if you have real estate investors, we have some incredible programs where there's no tax returns, for investment properties, where it's only based on the rents. We have so many different variations where, well, a lot of lenders, because it's Airbnb, short-term lease, it's a beach house, and there's no lease agreement, we're not going to do it. We offer short-term rental agreements where we take an average of those and utilize that as the monthly rent. And we have other versions of the program where it doesn't even matter what the ratio is. If they're putting enough down, the credit scores are good enough, the borrower has low enough debt to income. Not income ratio. I mean reserves.
There's the interest-only program also for those investment loans that has been released recently, even on the Airbnb properties and things of that nature. Business purpose loans that we can pretty much do throughout the entire country. If somebody asked me yesterday, can you do a fix and flip in Rhode Island? Yeah, we can do that.
Yeah.
You want to buy a couple of buildings there? Sure, we can do that too.
That's a good thing. So just so you know, realtors, buying an investment property or refinancing, whatever, in the name of an LLC, that is no longer considered a residential transaction. That's considered a commercial business purpose if the borrower is an LLC. The title is going in an LLC name. So it's treated very differently, and it opens up more doors and more opportunities to be able to give more creative solutions. So, but also, let's just say somebody wants to buy a house for themselves. They're not an investor. You're self-employed, and, your tax returns aren't looking too hot with all your write-offs, We have some awesome solutions for that, where you can put down as little as 10% down. With one version is business bank statements. There's a few versions. There's business bank statements. There's P&L only. There's 1099 only. And in the case of the business bank statements, just to give you a little quick education on what we do, we take the borrower's last 12, and this is something that's really cool because a lot of people who hear, business bank statements, they automatically think one thing. So we take all the business bank statements for the last 12 months. We add up all the deposits that appear to be actual business income. Like if there's a transfer from another account, that gets subtracted out. That's not a business deposit. But what appears to be actual deposits, we take that total number, divide that by 12 in the case of a 12-month program, and at the very worst, we'll give them 50% of whatever that number is. So for example, if there's $100,000 a month in deposits, that's $1.2 million. 50% of that is $600,000. So now your $50,000 a month is your income. Now, the part that a lot of people get confused about is, because I have some customers like this where I literally have a customer that deposits, it's like a very high volume food business. So, their cost is, and then profit margins, aren't really hot. So you have, let's say they take in, the same example, $100,000 a month, but they write out checks for $95,000. It looks like there's $5,000 profit, on the surface. That's not how we calculate income on this program. We are still giving them 50% with no questions asked. So in that case, that person would be given $50,000 per month for income in that example that we gave, because that is half of the deposits. It doesn't matter what's going out. So I just want to clarify that. So it's a really great opportunity with only 10% down. I mean, obviously, if the rates are definitely going to be higher with 10% down, but if they want to put 20, 25, 30, the more they put down on these types of programs, the better the rates and terms. I mean, we have some business bank statement loans with, rates right now in the 7s, which, if you figure a perfect borrower is somewhere in the 6s, to be 1% higher, with a decent down payment with no tax returns, I mean, that's awesome.
Well, I think back to as a realtor, when I bought my first house, and how difficult that was using my tax returns. Because as a realtor, you write off everything. You write off your mileage, you write off your food, you write off your coffee get-togethers, you write off, every piece of paper that you possibly can, because you have all these expenses and you're 1099, and you're going to claim all those. So why not? Well, with our 1099 program, a lot of that kind of conflict with the tax returns versus what's on the 1099 goes away, and you're using, that standard deduction on a 1099, even if you could do a 1 or a 2 year average, depending on what that looks like and how long you've been in the business. As a realtor, I wish I knew about that program. I wish somebody had told me about that. That would have made my life as a realtor buying a house so much easier, knowing that I could have gotten better credit for the income and probably better terms just based on the fact that I was showing more income based on the program.
So you're saying I should have started this podcast years ago?
Yeah, probably, but it was right around the time when probably 3-4 years after the market crash, and that's when I had originally become a realtor and bought my first house, and it was, I wasn't educated, and my realtor at the time didn't educate me.
Yeah,
sent me to a local non-bank lender, and I paid a higher interest rate, and I honestly was extremely dissatisfied with my service, and just wish I had known about all this stuff. And I think that's what ended up pushing me in this direction my whole career as a realtor, and that's how I ended up here in the first place.
With the rate and the price and all that, there's no question that that's the case. But yeah, I think a lot of realtors listening in their head are hearing, oh, well, yeah, but my person is great. Their service is awesome. Right. They're so knowledgeable. They get right back to me. And, the point I'm trying to stress is that's not good enough. I'm sorry, but that is not good enough. Just because the person is great at what they do, if they're 0.5% worse, then you could have referred them to someone else that gave them 5/8 better. That's also going to be great. Also going to call you back. Also text you late at night. Like, you're doing that borrower disservice. Just because your loan officer is good, that doesn't mean that's who they should be using. And that customer's relying on you as the realtor for that advice. Granted, I'm very happy that a lot of them decide to get a second opinion, or like, some of our attorneys that we work with, once in a while they'll call, say, hey, James, this customer got this loan estimate. It just looks a little weird to me. It doesn't seem right. I see a lot of loan estimates on a lot of deals. I'm just advising that you take a look at it and make sure that, if you can give them a much better deal, because it just doesn't seem right to me. Right. Nobody's trying to steer anybody, but at the same time, when there's a red flag, like what are you paying thousands of dollars in fees? Like, maybe there's a reason. Maybe there's a reason, but in every case that I've gotten one of those over to me, I was like, oh my God, like, this is horrifying, and how much more we're able to save the customer. So realtors, I really want you to be more mindful and just be open-minded to the fact that things have changed. Loan officers, some of these loan officers that you're working with don't know this. I'm serious. Like, we're in the process of bringing on a branch right now. A loan officer that's been doing this a very long time, he didn't realize this either. He didn't realize that the shift went back to wholesale, which is what our model is, and why. I mean, we have the best technology in the world right now. Better than all these non-bank lenders who are crippling wholesale 12 years ago. Like, now we're crippling them, and a lot of the loan officers that went out of the wholesale business into the non-bank lender model, they don't know that this has happened. They've been recruited by these big non-bank lenders with, here's this big fancy sign-on bonus, and that they're chasing those sign-on bonuses. But the reality is, if they would have just came to a place like this in that 2 or 3 year time period where they're locked in, they would have made more money here with no sign-on bonus, because of how much more we would have paid them and how much better of rates they would be able to give their customers. So realtors, you really just need to make sure you're doing the right thing and giving the customers the best solutions. That's all.
Driving that message home. Realtors, if you have somebody you work with that you really like because they are efficient, they are good communicators, and they do what they say they're going to do, have them call us. We can tell them or show them how we do things at Forte Financial. I can show them why I came here versus going somewhere else, and why they would be of a benefit to be with us versus being somewhere else.
Yeah, thank you, Chris. We are actively looking for good loan officers that are experienced, because now is the time, as a lot of the non-bank lenders are just progressively getting worse. I mean, some of the loan officers that I have spoken to recently, James, I don't even want to quote customers' rates, because I already know that they're going to get. I mean, so a lot of them know that their rates aren't good, but they're still trying to make a living. They
But they
still
don't
have
know what
to
else is
close
out there.
loans, but they don't realize, and they don't. Maybe the local banks might be a little bit like a hair better than what their pricing is, but they don't want to go work for a local bank. They don't want to deal with that process. It's just a different environment. Nothing wrong with anyone that works for a bank, but a lot of these non-bank lender loan officers, that's not their style. Like the wholesale, this is what they need. Like, would love the opportunity to share with them what we can do, which is only going to benefit your customers too, because they're going to get the best deals, while the best service too. So,
one of the other things I would say that as a realtor that became a loan officer, that I'm just going to throw out there, if you're a realtor and you think you're looking at your career as a realtor and you're the one looking at the numbers, you're the one examining the deals, you're the ones thinking like, is this client getting the best deal? And you're going through the paperwork and you're really looking at the numbers on every deal. Maybe you're better off as a loan officer. Maybe you should be making the switch to doing something like this versus just selling the homes. Because I can tell you that I love real estate. I loved selling homes, but this, I'm home. Like I'm the way my brain works, I'm where I need to be. And sometimes it just takes taking that leap to know, to figure out that you were not necessarily in the wrong place, but that there was a level up for you that you could be there. And just somebody like you showing me the way, like, hey, maybe this is where you need to be because of your mindset and the conversations we had over however many years we worked together. And so that's, if you ever want the realtor became LO kind of story and what that looks like, reach out to me.
Yeah,
give you the other side of it.
I love it. Yeah, I mean, realtors, just to piggyback off of that, we would absolutely entertain, a realtor who wants to, consider making a transition. You can do both. You can actually do both now. With FHA for a while prohibited it, but they've lifted that requirement. So you technically could keep your real estate license, sell homes, and be a loan officer at the same time. So that's something that we would consider. And
I did that for the first year.
You did.
I did. And you know what? After being here, no backup plan.
That's part of it.
All in.
It's part of it. We got to reel them in first, Chris.
All in.
Yeah, no, that's great. So this has been quite the podcast.
Went fast.
Yeah, it did. And just a couple of things, just to just some more program informational, things. One thing that we do specialize in that a lot of realtors, maybe don't love to just sell new construction or lands. We have an incredible program that is a full construction loan that is 5% down on the total acquisition. That's it. I know most of our it's mostly banks that are doing these. And when I talk to, because I have a lot of friends that are in these banks that refer, me a lot of business that they can't do. One of the things that, I've talked about is their construction. They're not doing 5% down on the total acquisition of the land and the whole build out. And they're certainly not closing that in 30 or 45 days.
Right.
Well, listen, the reality is we're not going to close it in that time either, only because the builder's probably not going to be able to provide us what we need to approve, the build and them. Although it's more than reasonable, it's just not usually the speed at which they work in, especially if they're not really accustomed to working with a lender. But the point is, our turn times are really fast on construction. It's 5% down. That's it. And the rates are incredible with only 5% down. You're having trouble finding houses, bidding wars, over asking. Let's use the example in Bethel. I did a deal this past year in Bethel. Customer found a piece of land. I think it was around $150,000. Found a piece of land. Went and found the builder separately. The cost of the house, I think the cost of the house was around $425. The cost of the build. So the cost of the land and house together total was around $550 to $575. I don't remember. It was in that range. The house appraised for $700,000. So they literally walked into this house, put 5% down on the acquisition cost of the land and the house, and got a mortgage at $500 and something thousand, and a value that the house appraised at $700,000. And it's a brand new home in Bethel. It's a no-brainer for as an alternative solution to someone who is having trouble finding a house. Build one.
Well, between that,
Get exactly what you want.
between that and 1% down conventional, where you're getting a grant for the other 2%, 0 down FHA, and you're not going through some of the state-funded programs that have double the underwriting process and double the approval processes and take twice as long, or and the new SPCP program where you're getting a $5,000 grant just because you live in a specific area in a specific state. So all the programs that are out there, we have them.
Yeah. Realtors, give us a call. Would love to talk to you more. I'm happy to further educate, one-on-one calls, happy to come into your office. We would love to have office meetings. This is what we've been trying to do, but most agents are like, unfortunately, we have an affiliated mortgage relationship, so we can't have you in, which is really sad because that's doing the customer and you realtors a disservice because, you're not able to, to get that education. That's why we're doing this podcast. But if you want to reach out directly, please do so. We'd love to talk to you more. Whatever
you want
to
build a relationship with us, great. Let's do a trip out to the lender. Let's show you what the wholesale side really looks like. We'll partner up. We'll get you and your best friends that are agents, 3 to 5 people out there at the same time, and give you a tour of that facility and show you what the back end looks like too.
And the other thing is we need realtors. We need realtors because if the social media that we've built out has been progressively growing, and we're getting either a call, emails, messages through our website, messages through the social media, TikTok, Instagram. We're getting almost on a daily, actually, it has been on a daily basis, customers looking for loans because we're putting it out there. And, this is only growing. So the more that this comes in, a lot of these are going to be purchases that we do need to refer them out to realtors. So we are looking to build more relationships with, the realtors that we really like and trust, and feel will do a good job for the customer in their area. Would love to have you on board to work with. So please reach out.
Oh, and another thing we talked about is as we build this channel out further and further, if you're a realtor and you want to dip your toes into the podcast world and you want to come on with us and talk about some stuff and get some social media built up for your own, we'll have you on as a guest. Yeah,
come in, ask all the questions you want. Nothing even needs to be prepared. We'll shoot it right from the hip. And, free content for you, for your clients that you can share. Come ask us questions that you want to know that you think would be good for, hey, first-time homebuyers. Let's do a first-time homebuyer Q&A. Realtors, let's do it. Let's educate. Let's educate everybody.
Yeah, I mean, we also, just as another Forte Financial thing, we're happy to partner with realtors that want to put on events. We're doing a first-time homebuyer event in about a month. Locally, we're going to have about 30 first-time home buyers or people that want to learn about the home buying process, and that's something else that we'll do. We'll partner with our agents and, kind of just put that all together and work together as a team.
Yeah, that's going to be an upcoming podcast is first-time buyers. First-time buyer education is huge. This is what I would say. This is in the times that I've had realtors ask me a lot of questions and about doing events, it's always first-time buyers,
right.
So we are going to do a podcast on that.
Misconceptions.
I'd love to have a realtor on with us when we do that podcast because it would be great to have an agent ask us questions. So if you want to be part of that podcast, please let us know. Please reach out. Please email, call us.
Yeah.
All right.
Great idea.
All right, guys. Thanks for listening. We'll see you soon.
Take care.